We are live on YouTube.
We're live on YouTube and a little bit late. Hello, everybody. We're just about to launch on Facebook. As soon as that happens, we'll get this party started. We're going to be talking about our first times today. Well, it'll be an interesting show, right, Rhoda?
Yeah,
we're going live on Facebook in 5, 4,
oh, we got the countdown.
3.
The countdown, yeah.
Hello, everybody. Welcome back to another episode of Finance Agents Live. Today is show number 74.
Guess who was born in 1974?
Robert E. Lee? That was 1874, maybe. All right. Today is show 74, and we're going to be talking about our first time. Right? First time. We're talking about Rhoda's first time, my first time, our first real estate loan. First loan we ever funded, or for real estate loans. Rhoda keeps wanting to talk about credit card deals or something, but first real estate loan.
A lot of ways to put together a deal. I just want to highlight that.
A lot of different kinds of money out there. But, next week we're going to be launching our real estate masterclass, full official launch. Super excited about it. And to prepare for it, we thought, hey, this is for people who are looking to get into business. Maybe they're trying to figure out if they're going to do their first deal. What's their first deal going to look like? So that's it. We're going to be talking about our first deals today. Sound good?
That sounds so great.
All right, Rhoda, let's get this started. Why don't we talk about your first time? How was it? What was it? First of all, what was it?
It was a construction deal in Colorado, and he had some money down. And, sorry, something's happening. He I'm
telling Dan to go to the next slide, but he's not getting the hint, so I'll just say it out loud. That's it. That's what we need to do. Okay, go. Those are the 4 things we want to talk about. Sorry, we tried to be subtle, but it didn't work. All right, let's talk about your first time. Rhoda, what was it?
Darren's riding a horse.
Yeah, I know. You should put that on there. Did they? Let them see that. Do it again. Do it again so they can see that. I'm not going forward until Darren does it again.
The
camera isn't set up yet. It's not.
Oh, he doesn't have the camera on.
I do, but it's all blurry.
Okay, all right. Well, he was doing Rhoda thing.
Save a horse, ride a cowboy.
Here, blurry.
There you go.
All right, there you go, the blurry version. That's what Darren's doing in the background. Now you know what we have to deal with while we're doing this. All right, Rhoda.
Tim.
Tell me about your first time. What was it?
This was a lead from an agent who is in Colorado, and they were looking to complete, he had a special deal where he could buy the land to complete basically a development for a bunch of townhomes. It was a corner lot in Colorado.
So he owned raw land and he wanted to build on it. That's what you're saying?
He was in the purchase of buying the land. He hadn't bought it yet. He had earnest money down that was getting ready to go hard. And
is that what they call it?
That is what they call it.
All right. Well, learn something new every day.
And
sorry.
You're the worst.
I didn't know that was.
You're the worst.
I'm sorry. It's a funny phrase.
I'm talking to my people.
Okay. He had some earnest money. He was about to go hard. He was going to lose out on a purchase. He needed money for the purchase.
He needed to purchase
and the construction.
And the construction. Yes.
Okay. Which is typically not our thing. But this was your first loan, so awesome. So, how long did it take?
I don't remember. It took a while for the final funding, actually, because once it was funded in 2 parts. There was the land acquisition, and then waited a while because he had to do permits and things like that with the city and get all of those approved. And so that part took a little bit longer. I don't remember how long.
Okay, so you were brokering, and you funded it in 2 parts.
Yeah.
The first one I feel like didn't take that long.
No.
Maybe a month or so. And the second one, it was like another 3 or 4 months away, right?
That sounds about right. Yeah.
Okay. Yeah. All right, let's talk about what ups and downs did you have during the course of the funding? Did you ever feel like you're going to lose the deal?
Yeah, I mean, he was an experienced borrower, and so you're always in competition with experienced borrowers and developers who know what they're doing, and they're out shopping around trying to get a good deal. So we had to be competitive. I think that I learned about how different lenders can structure different interest, whether they charge interest on the full amount for the entire time that the loan is unpaid, or charging interest on the first 50% and then charging interest in tranches after that. So
you're able to negotiate special interest way they did the interest rate, which is what ended up securing the deal. If I remember correctly, he wouldn't pay on the additional disbursements until they were dispersed.
Right.
While most lenders we work with, they give you a $1 million loan, even if they only give you a $500,000 now and they're going to give you the rest later, you're paying interest on the whole thing from the get. So that was creative and different, and that's what helped seal the deal. Anything else? Remember any other ups and downs?
Nothing stands out, no.
Okay.
No.
And so it worked.
Yeah,
happy ending, right?
Good.
Two happy endings, right? One early and one later.
Right,
so
right.
Awesome. Nice success story. Okay, so that was your first time.
That was my first time. And now
Gonna
we're going
ask
to
me
talk
about
about, I was going to save you for last, Tiger.
Okay,
I was going to go
it's
to
that exciting.
David.
It's a lot of build up.
Do you want to do yours or you want to do David's?
Let's go to David. All right.
Let's do David's.
So
mix it up.
I will just kind of talk a little bit before we launch. We have some video clips. We went and interviewed some people before the show. We're going to be playing the clips. We got 3 video clips and 2 audio clips of people I called up, people that have done a lot of real estate loans over the year, to ask them about their first loan. To the man or woman, every single one said, I don't remember
my girl.
No. We're Carolyn.
Oh, yeah, Carolyn.
They all said, I've been doing loans for so long, I don't remember the first one. So they just talked about the first loan they did with us. Interesting for, my first time was with David here. Before that, we did only business loans. So when we launched Lantera, that was the first one we got into real estate. So since we're talking about David, let's hear about David's first deal. First real estate loan that you funded.
My first real estate loan that I funded over here was a rural property in a city called Clute, Texas, which is a small little community. It was a gentleman that had what we call payday loans out on his business, and he also liened the property for his brother, who was a bail bondsman, so there were some definite problems getting the deal put together. One of the problems was it was a rural property, so we were a little skeptical lending in a rural property like that, but we got past that because the guy seemed like a decent guy. And the reason he seemed like a decent guy is he had about $12,000 a month that he was paying on his payday loans. And with us, we were able to take his $12,000 a month, cut it back to about $2,000 a month. So we're saving about $10,000 a month, which really worked out well. And he was able to get the liens released on his property and negotiate with his payday lenders to really make the deal even sweeter for him. So he got a less payoff from his payday lenders. He went from $12,000 down to $10,000 a month. And those were very significant benefits for the borrower. Again,
tell us about the lien. What lien did he have and how did you get rid of it?
Well, he had 2 liens. He had one lien with his payday lender on the property, which he negotiated to get a couple $1,000s saved off there. And then he had a lien because his brother was a bail bondsman. And in the county he was in, or the state of Texas, if you're a bail bondsman, you have to put up collateral, and he let his brother use one of his office buildings as collateral. So by the time he went back to the county to negotiate, it took almost 60 days to negotiate to have the lien release for the bail bondsman or subordinated behind us.
Okay, great. Thanks. That's it.
Got it.
When we're back on. Okay, so... Am I back? All right, it's back. Okay, so, interesting listening to that one. My impression for real estate deals is about 80 to 85% of it is normal stuff that happens, kind of similar on every single file. And then just about every file has 1 or 2 things that are random and you may not see it in another 10 years, right? How often do you see a guy who owns a property and it's got a lien on it from his brother's bail bondsman shop? Random. So, you can get into real estate lending relatively easily by knowing the 80 to 85%. And then what's going to make you or break you is whether or not you can deal with that, 10 to 15% of random crap that you had no idea would ever happen, and it's new and it's your first time. So it's first time every time, right? That's what I love about real estate. Okay, so that was David Krantz. Next we're going to be hearing from Trey Sublette, who you know very well. So the first 3 people are all internal, the second one are external or member offices. So Trey Sublette's going to talk about his first time.
Is that Trace? Trace Sublette?
Whatever you want to call him, he's happy.
Sublette. Not Tracy.
Extra funds to put into the property, make it an Airbnb. So the key ideas or key goal is to understand every piece of the puzzle to make things work.
Are there any complications?
No real complications as far as once you get to the point of knowing the math, knowing what's the value after the appraisal came in, everything is smooth. He was a great borrower because he is prompt and didn't drag his heels. I think everyone remembers their first time, and so mine with Lantera was a scenario where I was talking to someone about possibly being a member office and working with a relationship as far as he has a real estate background, we'll call him PM. and he explored another funding program, didn't move forward, but the key is knowing all the pieces of the puzzle. So I knew he had a property in Florida with some equity. So he had a property in Florida, nice location, owed about $550,000, valued at $1.4 million. We're able to get him through that process, have extra funds to put into the property, make it an Airbnb. So the key ideas, or key goal is to understand every piece of the puzzle to make things work.
Are there any complications?
No real complications as far as once you get to the point of knowing the math, knowing what's the value after the appraisal came in, everything was smooth. He was a great borrower because he is prompt and didn't drag his heels. I think everyone remembers their first time.
What's that? Doing it again, huh?
Yeah.
Am I back? Are we back? Maybe?
Yeah,
Hello?
you guys are, we are back.
We're back. All right. Sorry, I never know. Okay, so that was listening to Trey. That one got a little mucked up in the playback. Sorry about that. But, you know, it's interesting when I'm doing these interviews. My impression on real estate deals is that they're randomly complicated, kind of like I was saying. And so, you know, a couple of people say, yeah, it was a nice and easy process, but it never really is. And we're, I think, a much easier and more forgiving lender than most other lenders. Right? The normal process is there's going to be curveballs for a while. So you got to learn how to get around those curveballs in order to get the thing done. I remember this particular loan. Trey was working on it forever. I don't know if that all got through. This guy originally wanted to be in member office with us and talked to us about it for a while. Wasn't sure what he wanted to do. We submitted him to our credit card program to get financing for the member office, but his credit didn't qualify. And then in the process of figuring out how we could finance him, Trey discovered that he had a property. He ended up not becoming a member office and just getting the money to grow his real estate business, which is fine. It happens. And that's why the thing took like 6 months, because it was a long road before the guy finally figured out what he was going to do.
Right, and I want to add on this, as you're talking to people, their motivation is so important. Like David's borrower had a completely different motivation than Trey's borrower, and sometimes that can really help you put them in the right program and get them into a program that fits both their rate, how much money they're going to make, and going over that with them helps you become a more successful salesperson as well.
Okay, great. All right, next we're going to get Carol Bewley. Let's hope this one plays in its entirety. She's going to talk about her first real estate loan that she did with us.
My first real estate deal was a long time ago, back in 1990, so I don't remember it. So I'll talk about the deal that I did with Lentera. It was a $1.5 million loan. It was a strip mall in Sandusky, Ohio. It had a lot of issues. The client had to deal with title issues for probably 2 months to clear it. Yeah, there was mortgage payoffs for 3 different places, and there was tax liens. There was other type of liens and judgments on there that he said he had cleared years ago that were still on the title. So those are the issues he had. It took about 2 months, and the client had to clear it all with the title company. He ended up having to pay a lot of money for them to do the research. Probably 10 grand. We got it done.
And we're back. All right, thank you for that, Carol. Again, I remember this deal. It always sounds so easy afterwards when you're talking about it. Like, yeah, it took 2 months, you know. But this is one of those ones where we're like, is this thing dead? Like at least 20 times.
Beer a couple times on this one, because she brings in beer when her deals blow up, and I think she brought
Did she bring in beer?
She brought in beer on this one
I
too.
feel like I should know this.
She was that convinced that it had blown up.
Yeah, you know, I don't know how much I can go into this one, but he had something like an $8 million lien on his property, and I'm trying to remember the story behind it because it's really weird. He had a line of credit some years ago before the mortgage collapse happened, and then when the Great Recession happened, the bank yanked his line, but they forgot to remove the lien. So the guy didn't have any money, but he had the full liability on there, and he ended up having a battle in court for like 4 years to relieve that liability. And now it's 8 years later, and it's still showing up when he's trying to get real estate loans funded. And I feel bad for the guy because we ended up doing the deal. So clearly the title company was able to go through it and work through all the issues. But the only way to do that was to pay them a ton of money. They went and I won't even go into it, but there's going to be some lawsuits after the fact because they gave somebody else a $20,000 lien on his property afterwards. Anyway, long story short, we got the thing funded, but it was a bit of a battle. All right, so next we're going to be hearing from Lewis Jeffries, one of our member officers, has been with us a long time. He's been doing real estate deals way before we were. So let's hear Lewis.
Perfect. Okay, so Lewis, thank you for agreeing to do this. Why don't you tell everybody about your first real estate loan that you did, and if you don't remember that, maybe just the first one you did with us. Oh, and don't say I'm going to start this over. I'll leave that part out. Don't say the borrower's name, because I don't want to, you know what I mean? All right, let's start that over. Okay, so I have Lewis Jeffries here. He's been doing real estate loans for a long time, done a lot of them. Lewis, do you remember the first real estate loan that you ever funded?
No. that was over 30 years ago. The first deal that I did with finance agents, I remember that one.
Okay, great. Why don't you tell us about that one?
All right. So the client inherited property, and the property actually the client inherited multiple properties. And a number of the properties were behind in taxes, and a couple of the properties needed work. But they had some property the loan that I did was a piece of property that was a multi-family building that had tenants, had equity, and would allow us to get enough cash out to pay the back taxes on all the real estate that they inherited, as well as do some work on a couple other properties to bring those properties up to standard and be able to rent them out and continue the family real estate business.
Okay, well, that sounds like a good deal. Was it? What were the complications that you ran into when trying to get it funded?
Well, the first simple issue, simple is in the fact that we knew this right off the bat that he had poor credit. Mm-hmm. And so that was number one. Credit score was probably below it was below 600 was its credit score. Mm-hmm. So that was the first complication. The second complication, frankly, in Chicago, there are a lot of lenders that just don't do Chicago. There's certain markets that certain lenders don't do, and Chicago's a market where a lot of lenders don't do. It has something to do with the laws and and a few other things. There was a third complication is the guy could not prove income. So basically, we had to do a loan with someone with poor credit and poor, no income verification, and but he had equity in the house. So that was the negatives were the credit, the positives were the fact that he had equity in the house.
Okay.
And also there was another issue. The property, because he inherited the property was not in his name alone, and so we had family issues that we had to deal with.
Oh wow, well. That's a lot of different hurdles. How long do you think it took to get the loan funded?
Okay, so I started working on this loan with a more traditional lender. The loan, and I worked with the traditional lender for about 45 days to almost get ready to close, and for some reason we couldn't pull the trigger at the end. It had something to do with the borrower and his brother who was on the deal. And I had to talk to the brother. The brother just didn't come around. So they walked away. But then the borrower called me back and said, we're going to lose a couple of properties in 2 weeks, and we need to get this done right away.
Oh, wow.
And so I brought the deal to finance agents, and we were able to get the deal completed in less than that 2-week time.
Okay, awesome. I'm glad we were able to help with that. That sounds like a complicated deal. Okay, well.
All right. And we're back. Awesome. Thank you, Lewis, for doing that. I hope you guys learned something from this. Again, you hear the random stuff. Rhoda, she wants to introduce the next person.
No, I thought we were going to talk about the deal for a
let's
second.
Let's talk about it. Go.
Talk about the deal, and then you say, okay, and
okay,
now.
Let's talk about the deal. Go.
Yeah, that was your part. I was just going to do the next part.
I don't remember the client, to be honest. We got enough coming through here that I didn't know anything about it other than what he just told me. But I will say that when you get multiple owners on a property, it gets more complicated, right? Everybody's got to be in it. You know, for Lentera, that's kind of that's like our perfect deal, right? Turned down by another lender, has credit issues, can't document income. We don't care about any of that. All we care about is the equity. So for us, it's sort of a tee up.
Does it matter if it's in a trust?
If it's in a trust, I don't know that it really matters, frankly. It's not a benefit, but, you know, it's because I had somebody that wanted to get a loan from us who had a history of multiple bankruptcy. I mean, they were literally in bankruptcy right there, and we just weren't comfortable with it, and we couldn't do it. Also happened to be in Chicago, by the way. And they offered, hey, if I put it in a trust and get the trust would just deed it to you if there was ever a default. They said, can we do that? Would that make it easier? But after talking to our attorneys, that doesn't make it any easier. It doesn't really give us any additional protection.
Can you move assets once you're in open BK like that?
Once you're in bankruptcy, I don't know if we're getting a little off track here. If you're in bankruptcy and you want to sell something, refinance something, everything has to be approved by the court. It's just one of the hurdles that you have to go through. But he was trying to get a loan from us to resolve the bankruptcy. So, okay. And you know, and then we could have done whatever we wanted, as long as the court approved it. Okay, so that's 4 down, 5 including Rhoda.
And the next one
who's
is
next?
Our office, Jim, in San Diego, just south of us.
Remember the first real estate loan that you ever funded?
No. that was over 30 years ago. The first deal that I did.
Okay, that was Lewis again. Technical. So we're gonna
real estate loan that you ever funded.
We're gonna have some witty banter.
No. Tell us about your first time.
that was over 30 years ago.
All right. So like I said, my first time was with David when we first launched this. Finance agents history was with business lending.
I remember that.
And for the longest time.
Okay, great. Why don't you tell us about that one?
We have so many people that come in with equity in the real estate. I really wanted to get into it.
The client
figure out how to do so.
Inherited
met David. That enabled us to do so. So our first client was in Washington, D.C. I was trying to remember Washington, D.C. or Maryland, whatever. It's right there on the border. And this woman has an apartment complex with a number of units, and they were leased out and was doing great. She had some mandatory she had some improvements that she needed to do to the property, but she didn't have the money to do so. So if she wasn't able to do it, she's going to start losing tenants, but she didn't have the money. So we were able to pull money out of the property to enable her to do these improvements so that she could maintain her tenants in there. So yeah, it was the first deal that we did, and it was interesting. It only took about a month. Our first deals that we did here were all brokered. So Lentera started out brokering just like you would be before we grew to the point where we had our own line. So we brokered for almost a year, not quite a year, but almost a year. We brokered a lot of deals while we established the track record to be able to go to private investors and start creating our own line, similar to what a lot of people might do if they're watching this.
And similar to what our masterclass is going to help teach you is how to get your legs underneath you as you want to make a transition. Maybe you're right now in business and want to go to real estate. Maybe you're in something else differently and want to start making commissions on real estate. It's a perfect segue for us to be able to teach you.
Right, as far as the ups and downs on this particular loan, because it was my first one, I kind of let David take the reins on it. I do remember that the client was very unhappy with the rates that we were offering them, and so I felt we were going to lose the thing because she went away a couple times. But in the end, as it typically is, we're offering loans that nobody else has, and she didn't have a lot of other options. I remember we ended up earning 5 points on that deal. So it was a good payday for us, and the client got money that they really needed. So it was a win-win all around.
So successful.
So it was a success. All right, so with that, let's go into the last one from Jim, one of our favorite member offices that we talk to just about every day. He's been doing real estate for 40-some years. Let's hear about Jim's first deal with us.
First time.
Okay, Jim, thanks for agreeing to do this. Why don't you tell everybody about the first real estate loan that you funded?
Well, that would be decades ago, but with you guys, I just looked some stuff up here, and it was probably, at least one I remember, and I've got some notes on May of 2017. And that was a lead that we got through your system from one of our affiliates for our member office. And she was delightful, the lady I'd never met before. We got along really great. And we talked on through the rest of May, and she had to do a lot of checking with her partner, and they had to get things together. There was kind of a fix and flip motivation for them, but they really wanted to go the CRA, commercial real estate action route. Their credit was not the greatest, and they did have the equity. They had a building that was free and clear. They were continually having to update our information. They did meet with Tatiana, which was delightful for them, and David, eventually David Krantz, and everything went really smoothly, but we tried to get the appraisal going, and then they had delays with that, and as anything involving real estate does, or can do eventually, it just involved false start after false start, and eventually we did get this funded, and they were delighted, but it was October. Right. Until everything came to pass. So we started.
Why would they need? Hey, sorry to interrupt. You said they needed to update their information with us. Why would they need to update their information?
They had things they had to check on, documents they had to get back to us,
okay.
Clarifications. They were thinking about going other routes at times, perhaps using our unsecured business financing, and that also involved them resolving. They thought they would like maybe to get their LLC formed and be able to use their EIN number to do other things, and they kept on having specialist requests on their behalf. It really our experience was great, and she was happy, and she knew that the only delays were theirs. But we wound up having a really good relationship, and they've come back to me several times for CRE explorations as well as further unsecured business financing as well.
Okay, awesome. All right, well, perfect. That's what I was looking for. Thanks a lot, Jim.
All right, thank you so much.
And that was it. Thank you, Jim, thank you everybody who did our little interviews. I think one thing I would take from that particular deal is, and maybe from a number of the ones you've heard today, is that you got to be a little bit patient, right? If you're new to this, you want to come in and submit a deal, and you submit a client to us, even if it's a perfect customer that we would fund, it might be 3 or 4 months because you got to wait for the customer's timeline. Right?
Title issues.
Yeah, or sometimes you make an offer and they say no and they come back the next year. So by sticking with it, taking the time to work through the problems, not getting frustrated and quit, then you're able to get more deals.
Right, developing the rapport, I think that's one of Jim's biggest strengths, is developing rapport, so they will come back and give you a call and see if anything has changed or when things have changed on their end as well.
Jim has great jokes.
Great jokes.
You should. All right, now if you're watching this, do you remember your first real estate loan? Go type it in the chat or afterwards put it in the description or down in the comments below. We'd love to hear about your first time. If you've been doing it a long time, then we could even have you on the show later to interview you. So if you remember your first loan, feel free to put it in now. And then we're going to have Rhoda talk about some stuff while we wait for you to do it.
Do you want me to talk about my other real estate deal that wasn't mortgage?
Sure. No.
No?
What do we care about? This is real estate loans.
It is a real estate deal.
Okay, sure. Talk about your not a real estate deal, real estate deal.
Because people will want to fund things that are outside of the U.S. And then that was the big thorn in this one, is they wanted to buy a pineapple farm outside of the U.S. And so we helped them do that. There were a bunch of different partners. They all had great credit. And we helped them do that with our UBF program. I think that was great.
No, it's awesome.
It is awesome. Debbie Downer here.
That's not a Debbie Downer. It's just not a real estate loan. But if they're using the money to buy real estate, we got somebody credit card. So it just goes to show that there's a lot of different ways to skin a cat, which is kind of like our thing here. We have so many different types of funding that often when something comes in, if it's weird, we can find an alternative for it. And so we're able to do that. Anyway, we'll go ahead and wrap it up for the day. Thanks everybody for coming on. Remember, next week, come back. If you're thinking about getting into this, if you're thinking that you're ready for your first time, well, we would love to be the ones to help you do so. You need to get into our real estate masterclass where you learn to sell private loans. Now, with that said, if you're already in the mortgage business and you're doing conforming loans and you're tired of working your tail off for 1/8 of a point only to have it blow up at the last second because of TRID issues or whatever the heck you got to deal with because of the Dodd-Frank craziness, then come over to the private money side. We'd love to help you. Take our private money class and you'll see that you can end up making 2 points on $1 million loan for somebody who can't document their income just based on the value of their property. If that doesn't make alarm bells ring, I don't know what does, because a $20,000 commission on something that is dead for most traditional lenders, that sounds like good money to me, and we'd love to be the ones to help you get into that space. So come back next week. Got anything to say about the masterclass before just to
I think I
tease
said
them?
my little teasers trickled them out throughout the, planted my
the
seeds of
breadcrumbs
hope along the way.
All right. Awesome. Thanks, everybody, for coming on. Look forward to seeing you next week and doing a lot of deals together.
Bye, everybody.